Are you doing what the 90% are doing, or are you different? Hello and welcome to this week's Australian Share Market Report. I'm Dale Gillham, the Chief Analyst at Wealth Within. This week I'll be discussing what it takes to be a day trader, and then in the second half of the recording I will touch on the All Ordinaries Index and other world markets. So what does it take to be a day trader? Well, I began supporting and teaching traders in the 90s, and back then everyone wanted to day trade futures. Today, nothing has changed as the majority still want me to teach them to be a day trader. I find that interesting as I know with 100% certainty none of these people can tell me what a day trader does. When I ask them what they want to achieve, I get answers like, I want to make some extra money, or I want to replace my income. So what has that got to do with day trading? Well, nothing really. It's all great to want to replace or supplement your income, and this is all possible with the right education. However, it's pretty silly to label yourself as a certain type of trader before you even understand what trading is. A well-known statistic is that 90% of traders are unsuccessful. But would it surprise you to know that for day traders, I believe it would be well over 95%. In fact, my guess is that less than 1% of day traders are consistently profitable. So before you put on the shingle saying that you're a day trader, ask yourself if you know what day trading actually is and what it takes to be one. People who desire to supplement or replace their income from trading start by Googling around for trading information and education. This leads them to find fancy websites with images of expensive houses, boats and cars. Websites with the make quick money from very little capital message. You know the type. They show examples of charts of successful trades, making things look quick, easy and very profitable. Right now we're seeing charts of Bitcoin going from a few dollars to well over $10,000 in a matter of months. And there are thousands of websites on the bandwagon telling everyone that they can teach them to be rich in Bitcoin or foreign exchange trading. To be successful, you just need to find out how to do it the right way and then take massive action. If 90% of traders are not successful, logic says that if you look at what these majority are doing and then don't do it, you stand a chance of being successful yourself. In short, look at what the 90% of websites are promoting and don't do it. So what do you need to be successful? Well, firstly, you need a solid trading plan. Those 90% who fail do so because they fail to plan, or should I say, they don't have a solid tested trading plan at all. The second area you need to be successful is that you need to be committed, and that means having the right attitude. In my experience, those who fail do so because they fail to commit the time and money to developing the right knowledge and skills. There's an old saying that goes like this: what a wise man does in the beginning, a fool does in the end. Every week I have conversations with traders who want us to teach them because they fail to consider the above 2 points. In every case, these traders are inconsistent in their trading. When I ask them about their trading process, where they've learnt, what rules they use, and many other questions, I find that they've followed the path of the 90% who fail. Being different will mean you do what it takes to be a great trader and be part of that 10%. So let me ask you, are you doing what the 90% are doing, or are you different? So what do we expect in the market? Well, last week the Australian market traded to 5,958 points, and after a brief fall managed to stay around 5,930 points after following a positive lead from Wall Street. While the rise locally is a positive sign, investors should be cautious as this is the first week up from the bottom of the recent decline to the low at 5,834 points. Now it's quite normal for the market to rise briefly as sellers take a break from forcing prices lower prior to the final move down. Right now is the time to be patient. Looking ahead, markets will be assessing what is likely to unfold in the next US reporting season. But the more significant influence will be the Australian federal budget. Scrutiny of the budget by big fund managers in May can create volatility in our market. However, if the budget is received positively, the market will instead rise rapidly. Economic data coming out about Australia has been positive despite negative commentary. So let's get into the charts. Alrighty, let's get into the charts here with the All Ordinaries Index one on your screen right now. It's a weekly bar chart. It's slightly different than the one I've been putting up the last couple of weeks, and I will go into other world markets. And what you're seeing here is the current pullback. Obviously, this weekly chart, or weekly bar from the week ending Friday, the 13th of April, we see they're closing at 5924. And you can see here how I've got a dashed line up there of the resistance. Now, right now, we're not fully sure this downward move down here to this low here at 5834 that I mentioned earlier in my report this is the 2-year low that we've been expecting. Right now I do believe it is, but probability says to me that I still need to be careful because we have had several weeks moving down. And if I just expand this up a little bit, you can see here that the previous high was in January of this year at a 6256. So we've had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 weeks down. 12 weeks down suggests that we could be in a downtrend, or we are in a downtrend, but how long that downtrend is, it could go a little bit further. We still do have a little bit of time for the market to fall a little bit earlier. What I'd love to see here is, what I know is going to happen is we're going to get 2 to 4 weeks up at this point in time. How far up it goes will determine whether it's going to go down or not. So what I'm going to do is just put a little tool on here called a price retracement tool, which you've seen me use before. So you can see right now from this point here in March 2018 at 6130, which is the high, to the low of 5834. If it doesn't break through 5982, then that would suggest the market is weak and it will start to move over. I'm looking for it to move right up into this sort of 6,017 to 6,056. If it can do that over the next 2 to 4 weeks, the longer it takes to get up there, if it does 2, 3 or 4 weeks, the better. And then we're going to get a bit of a retracement of 1 to 2 weeks after that. And from then on in, if it does start to move up again, that way we know that the low of 5834 is the 2-year low that we have been expecting, and then the market will be bullish for the rest of the year. So right now, as I said a little bit earlier, time to be patient on the All Ordinaries Index and just wait and see. Don't jump in too early into your stocks. I'm going to look at a couple of stocks, but first let's look at, markets I meant. Let's go and look at the Hang Seng. So obviously the Hang Seng is the Chinese market, and we're looking at this, seeing that the 2007 high of 31,958 was broken through here back in January of this year. So it's done very, very well, the Hang Seng, and it's quite vertical. The Hong Kong market, or the Chinese market, is a lot more volatile. Asian markets are much more volatile than the Australian market or European markets. And if I can scroll this back a little bit, so you can see how quite volatile it is. That's a really good sign that the Chinese market has broken above that level. It is going quite vertical. So if I use my little trend line tool, you can see how vertical that is. And if I drag it across here, you can see how vertical it is. You know, when you're looking at this, it doesn't travel up at that speed for very, very long. It's normally only about sort of less than 12 months, 6, 7, 8 months, it'll actually travel. 10 months, it might go up at that level. So right now it is running quite fast up to that level. So seeing a bit of a pullback on the Hang Seng is not something that's surprising to me, that should be happening. Now let's put a little price retracement tool on here. So what I would expect, if it does keep falling, it's going to go down to 27,675 at that level at this point in time. So we've had one major bar down, one major month down, which was February. March and April so far haven't done too much. So let's get into the DAX, which is the German market. Again, you can see here how it's had a bit of a pullback. Let's scroll back a little bit here. We've got resistance at 14,000 points. Currently, this month is quite bullish. It found some support at around that 11,891 points. But right now, I think we need, again, like the Australian market, we do need to test. The DAX is at its all-time high of 14,000. So if I just bring that back here, so it's 13,956 rejected it. So it's quite an important level. Right now I'd be looking for a little bit of a pullback to see whether it has finished falling, and as you can see there, it fell back to that 38.2%, and we've shown you that a few times on the actual charts. Quickly, let's get into the Dow Jones, and then we'll finish off with the FTSE in the London market. So here's looking at the Dow Jones. We can see again that it has had a high of 26,616 in January, like other markets. Down bar, the major down bar was February, like it was with most markets, but if we move this out a little bit, we can see here how April is slightly trading higher than what it was in February, but we haven't had a huge big move down yet on the Dow. I still think there's possibility of more further downside on the Dow, but it may not happen. We may still see it rise up. The Dow is a little bit more volatile. As we said last week, I think it was I'm expecting it to come down to that 22,320 points level. Lastly, let's go into the FTSE. So you can see here the FTSE, I've got lots of levels on here. So 7,934 to 8,000 is its next sort of level that we're looking at here. The FTSE finally broke through its previous all-time highs back in late 2016. So was in new all-time territory, with January again being its all-time high at 7,792.56, and that got rejected. So let's scroll up and just move it so you can see it a little bit better. What my projections are here, if I move these out a little bit, so my projections are up to around these levels. Should we go up 2 months down, that did retrace quite nicely, so I wouldn't expect that there's no reason why the FTSE wouldn't start moving up, especially if other markets moving up. And you can see here again 38.2%. That's why I'm saying the Dow hasn't fallen enough yet. Other world markets have fallen to these sorts of levels. So just sit back and wait at the moment for the Australian market. If you are trading overseas markets, I think you're going to get more opportunity, and with the FTSE, with the DAX at this point in time, and I've got a little bit of caution on the Dow. So that's it for the charts this week. What are your thoughts? If you've got any questions, please comment below. Go and listen to our Talking Wealth podcast. They're available on SoundCloud and on our website. Now they're jam-packed with valuable information which will help you elevate your trading. Now if you're serious about learning to trade the share market and you'd like more information about our courses, please click the link in the video description below. Thank you very much for watching this video. If you've liked the video, remember to subscribe to keep up to date. I'm Dale Gillham, the Chief Analyst here at Wealth Within. Goodbye, good luck and good trading.